As we all know, as we all know, this is intended for our real estate partners to help them just get a better understanding of different products. And what are we doing this week, Ashley?
Profit and loss loans, P&L
So
loans.
this will be a overview of that. And it's just to provide another tool for their toolbox. If you're an NEXA loan officer, your opportunity to ask all the questions you wanted was last Thursday. As is every Thursday, we do a loan officer's plugged in with the same content that we do on today's for the realtors themselves. So don't make me be mean to you. Don't make me call you out. I do take particular joy in it sometimes. Um, anyways, so you are welcome, realtors. Please ask questions. There's a Q&A button. You can raise your hand. We'll bring you on the panel up here. May or may not embarrass you. I can't make any promises. No, just kidding. We won't. You can also put your questions in the chat. And with that, Ashley, fire away.
Thank you, Dan. Hello, everyone. Thank you for joining us today. My name is Ashley O'Neill with NEXA Mortgage, as you guys are aware. And today we're going to go over the P&L loan product that we have with multiple lenders because we are brokers, right? So a P&L loan, we wanted to just kind of talk to you guys about it so you can get more borrowers under contract using a profit and loss loan. It's a non-QM loan, so it's non-qualified mortgage. It's not following the traditional guidelines. It is a type of mortgage that considers a business owner's profit and loss instead of their traditional personal income. So I don't know where you guys are located. I'm sure all over the world. I'm in South Florida. We have a lot of self-employed borrowers. A lot of people are working from home, working for themselves and things like that. So this type of product is perfect for these type of borrowers, self-employed. So just to give you an overview, like Dan initially stated, the lenders pretty much evaluate the clients, the borrower's business P&L statements, which shows the business income and expenses over like a period of time, usually a year. So you're not looking at something for 5, 6 years. They're usually just going back. We have lenders that go as far back as 12 months. You do want to make sure this business is licensed and registered in their particular state, at least for a year. However, that's something you would definitely want to kind of get with your loan officer, your next loan officer regarding. But definitely, it's literally just kind of documenting their income because it might fluctuate, right? They're self-employed. You have trends when you're self-employed as entrepreneurs, as we all are aware. So it can go up and down. So if they have a CPA, right, or an IRS enrolled agent, you can pretty much get them to help prepare the profit and loss statements and get that over to a lender. So with that being said, P&L loans are ideal for self-employed individuals, businesses that may not have traditional income, like pay stubs, W-2, and things like that. Businesses that have like irregular deposit activity. So maybe like I literally just had a client, they were self-employed and they own a funeral home. So, I mean, I hate to bring that up, but some deaths occurred a little bit more frequent than others, right? Unexpectedly. So their P&L, this month showed like drastic amount of money and then this month may not. So when you get that CPA to provide this information, the lenders are able to take that average over a year time span to be able to give them credit for income for qualifying purposes. So we do have products like that. We have multiple lenders that offers the P&L product. This is a great way to kind of present to some of your borrowers, like, hey, maybe you don't have your taxes or W-2s and things like that. What about a P&L? You're a successful business owner. You're bringing good money in, right? So that's what a P&L product is usually ideal for. Businesses that come with seasonal income, right? It could be like in the summertime, kids are out of school, everyone's home trying to look for fun activities. The business income skyrockets. So this is for these type of businesses and self-employed borrowers. So just keep that in mind. And it's also an alternative to a bank statement loan. So usually with the bank statement loans, you're looking at the bank statement. With the P&L, you're getting your CPA or your IRS enrolled agent to, whoever prepared the financials, review the financials, sign off on it, and provide that profit and loss statement for the lender so you can get your borrowers under contract.
Wonderful. Is there a traditional, since it is a non-QM, should they be having the discussion with their potential buyer about money down or what they have
Yes,
saved?
yes, absolutely. So when anytime you're speaking of like non-QM products, non-qualified mortgage products, where it's not traditional, we're not looking at the 3 to 5% down. Literally, you're looking at least 20% down, 20% down or more. You definitely want to have a decent FICO. So these are for, entrepreneurs that have like, I want to say at least a 660, 680 or higher. The higher, the better. And it's non-QM. So you're definitely going to be able to have a little bit more leniency, a little bit, not like a traditional loan in a sense with all the paperwork. You just got to make sure you have someone that's able to review and attest to the information that they're signing off on, which will be your CPA who reviewed your financials. There's definitely higher loan amounts as well. So I mean, we have lenders that can go up to 3 million on these. So it's literally just providing a more accurate reflection of the financial health of the business. And some people don't know about these products. They're just so used to the traditional FHA, conventional things like that. But, in the non-QM space, you have, it's a whole nother world. And there's ways to still get these clients under contract for these properties using alternative financing.
Yeah. So the only difference between this and a bank statement is that CPA signing off on this, signing off on the financials.
Right, right. So with the bank statement, they pretty much, we have lenders that do 12-month bank statement. We have lenders that do 24-month bank statements. However, there's a ratio, like calculation that they would take, right? Basically, whatever deposits you have versus what's leaving your account. So there's an expense factor that needs to be considered as well, right? So when you're comparing that to a profit and loss statement, you're literally, your CPA is attesting that, hey, my client business owner has made this. We have a balance sheet. You can see what this is for expenses, but this is their income, even year to date, right? As of today. So we already kind of ended the first quarter at like literally, sometimes they ask, for the profit and loss in the year to date as of January to April or second quarter, whatever the case may be. However, you know that you have your CPA who reviewed and prepared your financials to be able to provide that information for you. So it's not as much paperwork, not as tedious, the process, for people that pretty much have the income, right? 20% or more. Down gift funds are accepted as well. We do have some lenders that will accept gift funds. However, they want at least, you want to make sure your client have some skin in the game and some money for these non-qualified mortgage, because they're not cheap either. It's just another alternative way to get the property, right? If your paperwork is not up to par, your taxes or whatever the case may be.
Okay. Does anyone have any questions so far for Ashley?
So some of these are so like simple that like question wise, it's like there's not a lot to cover, and so
Right.
it's kind of hard to come up with questions, but
Isn't it? It just doesn't seem fathomable that it's
right.
that easy.
Well, and from an agent's perspective, it's just another option for your self-employed borrowers is not to have to go down the road of collecting 24 months bank statements or 12 or whatever the case is, or I mean, let's be honest, self-employed people don't want to pay taxes, right? Yeah, I get it. But if you're not going to pay taxes, you're going to pay a lender. So you're going to have a higher down payments. You're going to have higher interest rates. Overall
For the time being, right, Dan? Because what I like to tell some of my realtor partners and clients is, hey, as long as we can set up a exit plan right? Whatever the exit plan may be to avoid prepayment penalties, or if they want to refinance a year out, whatever the case may be. As long as we have an exit plan, it's not a bad plan. You want this house,
Right.
right? You love this house. So this is how your paperwork, to lenders, qualifying purposes, this is what it's looking like. So maybe we should try this option, this route with an exit plan, and then you can't lose that way, right? So sometimes we just have to educate our borrowers, and that's why the realtors, you guys really need to get with a NEXA loan officer so they can help educate you and or your borrower
Now.
regarding alternative. Yeah, now regarding alternative financing, because it's not one.
Right.
There's never one way to skin a cat. And here at NEXA, we have plenty ways to skin cats
And
with a lot of investors and lenders.
so Michael has a good question. How many months do they have to be in business?
So you want at least a year. I mean, we have some lenders, they want at least minimum year. You have to be registered, fully registered with the state, things of that nature, at least 12 months. Like I said, we have options, but for sure, at least 1 year.
So I own a landscaping business. I don't need to be licensed. How do I prove I've been in business for a year? Well, will my CPA letter work?
If that works for your state,
I'm being devil's advocate here, you know that.
Oh, okay, because I'm like, well, if that applies in your state, right? So your state and city rules and regulations apply, right? But if
Right.
you're able to be a lawn service person, then I'm sure if you're, you have a CPA or whoever reviews your financials, you should be able to do that. I mean, they may have some
We have some extra
additionals.
hoops to jump to.
Yeah, may have some
Mhm.
extra, yeah. But I'm sure with some letters of explanations and things like that, you should be able to make that work. Still making an honest living, so.
There you go. So it sounds like
that's what I was-
minimum is 12 months. That's what
Yes.
we're looking at.
Yes.
And I think that's why
Yes.
it's important for our realtors to have that conversation with their potential borrowers now. To say,
Absolutely.
hey, we can still help you get into whatever house you want. However, this is what we
Yep.
need now, so we have that longevity to show.
That is correct. I agree. The more options, the better, you
Right.
know?
Absolutely.
So the key to all of this is work with your NEXA loan officer.
Mhm.
Get with them. They have all the tools in the toolbox. We have some 250 lenders. You can only imagine the number of programs that we have available to, both a self-employed and a W-2 wage earner. Your NEXA loan officer can help you with all of that. We have creatives available, that you can co-brand, different products. Again, your NEXA loan officer has access to all this co-branding marketing material. So reach out to your NEXA loan officer.
Absolutely.
Who is doing their P&L? Well, it needs to be either a CPA or a licensed tax preparer.
Yes.
They're not going to take their I go to Quicken and type in some numbers. There's not a lender in the world
Right.
going to take that P&L, because that's about as worthless as whatever
I know what you're thinking.
whatever you want to compare it to.
Yeah.
But
Because remember that we have to have a licensed professional to be able to attest to what they're submitting to a lender, because you have to be able to prove your ability to repay this loan. So yeah, like Dan said, it has to be someone licensed. You cannot just submit your own P&L because, obviously.
because buyers are liars.
They'll submit whatever, and it's like, yeah, it has to definitely be by a licensed professional for sure.
Yeah.
And that's like a
And
licensed
don't forget, you
CPA
guys-
or an enrolled agent. Sorry, Karen, go ahead.
No, that's okay. I was just gonna say, don't forget about loanofficersupport.com. You can always log in with your
Yes.
buyer and go through these scenarios with an expert like Ashley, like Dan. And this way they can have that conversation. It doesn't have to be a million emails and text messages and, everybody's kind of leaving the table going, I still don't understand. log in and talk with one of these guys. They can really help you along the way, or come up with a game plan for when they hit that 12 months. You can be ready to start showing them homes.
Absolutely. That is so true, Karen. And we're available. We have some amazing coaches available, ready to be able to help you understand and or your next loan officer understand, or even do pricing. I personally like to go directly to our lender for raw pricing, but at least we can get a guide and see where we are. But any non-QM product, it will be a little bit higher because it's not a traditional loan. So you're actually submitting less paperwork, less scrutiny in a sense, right? So you're gonna have to pay for that, right?
Well,
Or
the
And
risk
higher
is high.
risk.
Ultimately, the risk is higher to the investor, right?
absolutely.
You don't have traditional income. We're relying on, a third party to kind of prove your income, right? That's not the IRS. Not that we should trust the IRS, but but lenders have more trust in the IRS than my friend the CPA. So the risk is higher. Rates and terms are they're going to be what they are, and here's the reality is I can get them into a loan that they could not have gotten into 5 years ago.
Yep.
It's in the last 5-6 years that all of these non-QM products are really coming back to the table. We're back in the quote unquote subprime era, where we're making loans that we didn't make for a while, and they could still buy their home. They're just going to pay for it a little bit more. And so we have to accept that. And, when lenders go, well, I don't like that 9% rate. Well, then you don't want to buy a house.
Right.
Then go pay the IRS the $100,000 you would have owed them in taxes, or use that $100,000 and put it down on a house, and we'll get you in, so that's my
Yeah, you're gonna spend the money one way or another. I mean, it's really a
Absolutely.
matter of how you choose to do it.
Would you rather give it
Yes.
to Uncle Sam, or would you rather put it into your mortgage? These are the facts.
Good point. That is a good
Great.
point, Dan.
Yep.
So we try not to run these things over, just to run them over. Can they refinance later? Yes, they can. Most of
Yes.
these non-QMs will have some kind of prepayment penalty with them. Most of them are a 3-year prepay, but it can be bought out. If they know that they're going to, that their circumstances are going to change in 12 months, then they, buy it down to a 1-year prepay at closing. But the prepayment penalties typically aren't awful. Maybe 6 months interest or whatever it is. But yes, they can absolutely refinance down the road.
Mhm.
All right. I don't see, we got one, that's done. I don't see any more questions. I don't see hands raised. My question was inartful. Can they refinance to a lower rate? Sure, they can, I mean, I don't want to sound like an idiot here or an asshole, but why else would you refinance if you're not getting a lower rate or you're not pulling cash out? So,
Yeah.
they refinance to whatever the rates are at that given time. If you listen to the expert, rates are supposed to come down at some point, but we've heard that for the last year. So, and we're, pretty close to where they are. So.
And minimum ownership, I'm not sure if I understand that, Byron. Minimum ownership requirement is 25.
25%. Yeah. Yeah. I mean, most lenders want to see at least that you own the business, at least 25%,
Oh,
that
the
you have.
business, gotcha.
Yeah, that you have like some type of leverage to be able to make any rules, right? To purchase under this program or this product if you're sharing partnerships. So yes, that will be considered as well.
And Jody, you need to log into LO support. We don't discuss lenders here.
Yeah. Your NEXA loan officer will be able to help you with that, though.
She is an
Yeah,
excellent
for sure.
officer.
Oh, Jody. They should have to check off the disclaimer at the beginning.
Realtors don't ask those kind of questions. Who's the lender? We are the lender.
Right,
NEXA,
we are the lender.
NEXA is the lender.
Yeah, this is where the magic
This
happens.
is a NEXA program.
Yes. But be sure to get with your NEXA loan officer. Log in. They have a lot of co-branding creatives. Our marketing team is really creative when it comes to those pieces. So take advantage of it. It's free.
Yep, for sure. Co-branded, go in an area where self-employed people or whatever near you and just start firing off the P&L loans. Set yourself apart.
Yeah,
All right.
a lot of these.
What's our topic next week, Mia?
So we do have FHA loans with Mary Lee Dixon.
Excellent.
Nice.
All right.
Just a refresher on the FHA products. There's so many FHA products that that it won't be just standard information. There's a lot. I've seen her little thing, and she's got a lot of information, a lot of good information coming. So
Love it.
Having said that, thank you all for coming. Ashley, thank you for your time. We know it's
Yes,
My
thank
pleasure.
you.
valuable.
Thank
And
you guys so much. Make sure you join next week as well.
yes, come see Marilee. Same bat channel, the same bat time, just for you, Karen.
Thanks, Dan.
All righty. Have a great week.
Have a great
Bye,
week,
everyone.
guys. Bye.